The most overbought market ever recorded in history. Yes, it's 2024 and we need to talk about some of these stats. 8 days of gap opens on the S&P 500, a whaley breadth thrust, a triple 70, and huge dark pool liquidity. What does it all mean to us as traders and investors? Today we'll break it down together along with our long holding statement that gold looks damn good. It's breaking through, as is Bitcoin, as we suspected. Flows coming in across the board, and there still could be some legs left in this market. So let's break down the bull and the bear positions right now as we cover stocks, commodities, and cryptos together. This will be a good one. Let's get into it. Well, welcome back everybody to the Daily Show. My name's Tom, and as always, we're covering everything from the macro to the data to the lead indicators and the hottest charts together. And it's really what we've been suspecting for quite a few days. Huge thrusts through the rest of the market, including the equal weight, and a weakness in the big tech companies as the biggest flows start to move elsewhere. If it's your first time here, remember to subscribe and smash that bell icon if you want to understand more about rotation and how Wall Street does things. But let's start it with the first story here. And of course, that is the most overbought historical market for the Russell 2000 or the NASDAQ in recorded history. Basically, we are now 4.4 standard deviations above the 50-day moving average. And little wonder why, with the huge move we've seen in the Russell 2000 straight into our first take profit target level. You can see here that US equities have all been about the small and mid caps, which we knew was coming through as soon as we saw those CPI reads. And it's been probably one of the best kind of 5-day sessions that we've had in a very long time. The monthly breakdown of S&P 500 at all-time highs tends to always happen in July, as you can see here. And it's not unusual now to possibly see some weakness when it comes to other months. In particular, the possibility is that August and September might have some problems. But let's start with the bull case first, and that is, of course, the whaley breadth thrust. Now, if you've never seen one of these before, you need to be paying a lot of attention to them. They tend to do very, very nicely. And the whaley breadth thrust indicator is triggered when the number of 5-day advancing stocks in the market exceeds the number of 5-day declining stocks by about 3 to 1. You can see here we just triggered this. This chart is thanks to Grant Hawkridge, and this is the breakdown of what happens next. And you might notice a theme here. There's a little bit of shakiness over the first couple of days into the first 2-week period, but there is a very good chance that markets return to very nice returns over the next kind of 200 to even 300 days, with the positive returns being really ridiculous, over double digits. So are the bulls gone just yet? Well, I don't think so. And of course, as we've been discussing for a while on the channel, we do believe we're in late cycle investing. This is the type of market you usually expect. Absolute ballistic, looks like it'll never crash, and then of course sucks everybody into taking huge leverage. And in upcoming videos, we're going to explain why taking huge leverage in the future could be the most dangerous thing you ever do in your life. SPY after 8 consecutive gap up days, pretty rare signal, certainly can top off markets a little bit, and it's happening at the same time we're seeing all of these breadth thrusts. I think the important factor is though 6 months later and 12 months later, according to this chart from Jason Gotford over on X, basically shows very positive returns. It's the question mark really the next couple of weeks, even into the next 3 months. And as we know, as we go through the first 2 weeks of July, the best 2 weeks of the year recorded in history, we've got that in a couple of videos ago. Make sure to go and get a snapshot of that chart or take it off our X account as well. So you've got it in the history, because there are some other good weeks as well around January and February that you want to be paying attention to in the future. But the next 2 weeks could be a little bit of a slowdown, maybe even cooling of the brakes after getting so much thrust signals. And these doesn't mean that it's the bull run's over or anything. It just means that it's statistically more likely. You can see here, these are the positive times that markets tend to go up and the times they tend to go down. And you'll notice the back end of July is more of a softening effect that can occur on markets. Then August can be, really very placid. September obviously brings usually the negativity. These 2 months in particular during election years need to be watched. And then, of course, it goes back to being very bullish in general around November and December. This is in line with really what we've thought when it comes to election years, and it's certainly worth paying attention to. As we mentioned, it's not just the whaley breadth thrust. We're also seeing a triple 70 thrust as well, which is leading into even more bullish statistics. But again, the next 2 weeks, you want to be paying attention to the markets because, of course, most of the weakness in all of these stats tends to be after you first see the readings. Sometimes it can be sideways. Sometimes it can just go down. And very rarely does it absolutely go ballistic over that next kind of little 2-week period. What about the earnings reports? We know that Thursday is the most important with TSM, the semiconductor, and of course Netflix coming out with their big return. But Morgan Stanley had a pretty good time. As we suspected, all the banks were going to do pretty well. And Bank of America as well, if you want to pause it here. Here's a quick synopsis of their earnings. Effectively, again, pretty good. And what we're seeing is, as we suspected, a lending of debt. And this is growing the economy, but of course doing it in a semi-dangerous way. Now, with everyone getting so excited, it really does matter that we do get a Fed rate cut now. If we don't get one in September, the markets are going to freak out. And I saw a comment, and I thought I'd just address this. I've often said that the Federal Reserve doesn't cut rates out of the goodness of their heart. Look, they're cutting rates in this case on kind of like, I guess, the concept that they have kept rates quite high for a while. Obviously, that is doing damage to the economy, but also that paying back the debt and therefore not having to issue treasuries is something they've got to look at. Central banks around the world are in pretty much sugar rushing the market as much as they can. And they're trying to do this to stop any cataclysmic event of the debt markets. In particular, I think the regional banks is what the Fed is quite concerned about, as there are so many toxic ones there. Ultimately, if we do end up seeing rate cuts, we've got to remember we're looking realistically for the yield curve to uninvert. That is, the 3-month and the 10-year yield curve uninverts, and then it usually brings kind of like pretty bad types of things, especially when we've been inverted this long. The bonds market is not often wrong, and I tend to pay attention to this. And I think where most people are going to get this one wrong, guys, is going to be that they think that when it uninverts, it has to crash in the next 2 weeks. That's not really the way. In fact, recently, we've seen over sometimes almost a year, sometimes half a year, or even it could be even further this time around. Remember, this rate cut's a little bit different. If they do it, it's more to kind of support sugar rushing and then support also the payment downs. Ultimately, we're looking at the debt market the most and seeing when we get that toxic debt starting to come through. And we'll be watching it together, so don't worry, we'll alert you when we start to see that. S&P 500 performance after the first Fed rate cut. It'll be interesting to see how the market ends up reacting. It generally bulls into anticipation. Then it can go one of two ways. Of course, it can go down or up. But in many even recessionary times, it's gone ballistic and then ended up in a recession after that. So you've got to remember the market will react the way it's going to anyway. But at the moment, we are seeing clear signs that the bulls are in control, particularly from home builders, which has been very strong. Here's another interesting chart for this week. The NASDAQ, as we reported from Jeffrey Hirsch, basically over the last kind of 6 years, we've generally seen July, the back 2 weeks of July, specifically the OPEX week, which is this one here, not be very good for the Qs. So that's kind of coming true. We're seeing a great rotation into small caps, mid caps, but we're not seeing the big mega caps doing as well. So that's why the NASDAQ is probably holding as in some ways. It's had its great run, and now it's catch up from the breadth statistics. Let's move over to the earnings season. TSM, Netflix, they're the big ones. And of course, Netflix expected to be plus minus 9% overall, which is going to be a huge move. TSM also going to be wild with a 7.5% to 8% move. These two will really set the tone for the technology stocks. And I think we're going to see a lot of potential rotation and huge moves off that. And of course, as we hit into earnings season, we know that August and September into October generally will crescendo the VIX. This year, that's what the VIX thinks. The term structure tells us that volatility is going to rise over the next month, and we have to be on the lookout for that, of course, as we're all getting very FOMO-ish about how well this market is doing, and rightfully so. The stats, of course, are quite bullish. Now, where are extra opportunities? Well, we've talked a long time about gold, and obviously we've talked about gold stocks being far behind. Junior miners have been breaking out in recent times. They've been doing incredibly well. The history of gold cycles obviously suggests that we're in a big boom period for gold, and these are some of the reasons I also believe that gold is going to go up. I've been a long time believer that gold is going to reach at least $3,000, and of course, it's on its way with a new all-time high. You can also look at GDX. That tends to be a pretty good gold mining ETF, and that's been doing amazingly. Now let's move over to unusual trade activity. So we've been talking a lot about, of course, China stocks ever since down here. And we've seen some large trades. We saw massive dark pool trades around here. We saw some profit taking over here. And we've pulled back to a level that we would suspect has buyers in it. But of course, with the news coming out of the weekend, they haven't fared so well. Well, that is until we see this massive dark pool transaction over the last 24 hours. K-Web getting a big one in it. And I would say that the next kind of 1 to 2 sessions, especially if it goes bullish, could tell us a lot about whether Wall Street is starting to stack into China stocks again, even with the kind of ominous tariffs on board potentially for the future. Another one is that we got the semiconductor ETF getting one of its largest trades ever, this one being SOXQ. And you can see here the third largest transaction over the last 2 years going through. Is it a buy or is it a profit take? Not sure. I mean, there's been some in the past that ended up being sells, you would have to suspect. And this one over here was, of course, a buy. Price action will tell us to us, but we do still suspect that semiconductors is probably coming back to mean reversion, which we'll go into later on. I always have to put this chart in so we can talk about it. Just remember, we are still in the late cycle of investment. We usually expect at this period of time, generally bullish action, dips to be purchased up. And generally in every year, you expect around 2 dips. So effectively 2 dips a year is expected between 5 and 10%. So far, we've seen 5%. That's why we're kind of thinking August to September may have a dip in it. Doesn't have to, but generally it would. And of course, that's based on the VIX term structure and earnings season. But in general, it looks like there's still more bull run to go. And you need to keep that in the back of your mind if you're an investor or even trader trying to put in a massive bear position or something, because it just doesn't look like that right now. KRE and ITB top the charts off in rotation. These are the 2 sectors, or some of the sectors you want to be looking at for bulls. Deregulation, speculation coming in for KRE. We all know that's going to end really badly, but anyway, it's pushing them up. And ITB getting a monster boost. And as we know, if home builders doing well, it's all green, all good on the markets. As we've expected for a while, XLC, semiconductors, and technology were down in the session, and energy stocks were up, but they were struggling a little bit thanks to oil struggling and moving around $80. And we'll look at the spot in a moment. That brings us to a 5-day total now of home builders, clean energy, and regional banks and gold and metals being the best. And this is a full rotation. You'll notice down the bottom, you'll notice up the top, it's a full rotation of markets going through, basically buying into the Russell huge time. Now, the S&P 500 has had 8 gap opens. That is gap opens, not necessarily that they've held all those sessions, but it's basically in what we call a melt-up phase. Look, are we going to hit 5,700? It's possible. I'm having a look here at the delta, and you can see that, of course, the delta has been, I would say, net negative over at least the last 6 sessions when you really put them all together. And that is kind of something that we want to pay attention to. Another thing you want to be looking at is how does the weekly close? So at the moment, we're going up, and we can see here that we're currently negative in the delta. We'll see how it closes. And the only reason we're doing this is because, of course, we got our stop sign a few weeks ago, which basically just tells us that the market's quite overbought and that we usually expect the market to start to struggle around 2 weeks after that. Now, that doesn't mean that it has to. It's only a first read. We still want price action on the smaller timeframes to confirm any of that. And for now, if I was an investor, I would definitely still be very, very happy. And as a trader, I'd just be a little bit more cautious against getting into leveraged long positions, especially since Russell 2000, which was our main long over the last couple of sessions, that just hit our first target. And we'll go through that later as well. US 500, as you can see here, this is the classic melt up, the dull market. You do not usually short a dull market until it actually shows you to short it. Key levels at the moment for where buyers are, they're sitting around this 1-day expected options move low, 56.30. Could be buyers off that. And of course, 55.77.80 zone. There could be buyers off that as well. An anchored VWAP catching up. Plus, we've got the demand zone. And I think we're going to need to at least break below that to even bring any kind of significant bear in. So for now, it's all bull, all green, all good. Let's move over to the net GEX expirations, and you'll notice it's pretty much positive gamma across the board as we lead into the OPEX. There are way more greens than reds, so effectively, if we do push higher, what does that do? It's positive gamma, so it means that the market will have to be hedged off, and that means the dealers might be offside. They may have to buy into the futures, and that can end up squeezing the market higher. Of course, the target for most bulls right now is sitting around 5,700, and you can see that's pretty much the most struck level around 57.05. NASDAQ CTA is still basically just neutral up. And if we have a look at everything else in SPX, they're the same as well. Gold still looking really strong from the CTA component as we make a new high. Brent still struggling, so it'd be interesting to see whether we can get a bounce here at the $80 mark for Brent. Very important that US and UK oil does end up holding up. And copper still struggling a little bit from the CTA side. So it doesn't have that thrust in it did the other day. And they're all at supports at this stage. What about Tesla? Well, the good news is Tesla through 250, 255, 260 will bring in lots of hedging. You can see some of the 250 levels were closed. So now for positive gamma to really be taking advantage of, we need this market to continue through the 260. And you'll notice spot price currently at 256.60-ish. If we get through 260, wow, it could get wild into 275, which is 275, 280 is actually our second target. Our first target was around 250. This would be our second target, and it could point and lead the way towards 300. So realistically, overall, the next couple of weeks, very important that Tesla starts to close above some of these levels. 260 and 265, that should bring in a lot of flow. NVIDIA, on the other hand, it's still struggling. Spot price around 126. We know that most of the calls and the positive gamma situation sits right at $130. So as we've suspected for a while, it's between kind of that 115 and 140. And we expect kind of really NVIDIA just to chill here until maybe earnings. We looked at the term structure. We'll do that again based on your comments. You guys enjoyed it. So we'll bring that up. But yeah, it's more of the same for semis. We kind of expect them to be up, down, and all around in terms of the sideways action. High yield junk bonds. Let's go into some of the lead indicators. Are the bonds telling us to sell the market? No, and they're looking very good. My other indicator that tracks bonds and tracks kind of everything that's going on, you'll notice here again is not freaking out. So that's a good sign. And US 2 versus 10 year actually went up a little bit over the last kind of 24 hours. So we're just looking at this for uninversion of yield. Obviously the US 2 and 30 or 10 and 30 year, those kind of ones, the 30 year in particular, was starting to show signs of inversion versus the 2. That's something that we can look at, but for now, it's not really the most worrying kind of uninversion of yield. So just remember, it's about the 2 year and the 3 month and the 10. They're the ones that you want to be looking at. Treasuries have done okay, but then again, I reiterate, I don't think they're trades. They're more of, kind of accumulation pieces. And at the moment, they're accumulating at around these zones. Some big trades coming through, and ITB doing amazingly. Home builders going ballistic, closing on their high. That's not a bearish sign on markets. Let's move over to copper. Copper at 61.8. Want to see buyers coming in here. Very important. We watch the next session or two. I think we'll probably get a trigger off copper. If we do trigger to the long side, that'll be awesome. At the moment, looking for a close above 460 to really get the bulls back in board. And if that happens, I think flows in, will go past 470 and will lead into 490. So copper, very important next couple of sessions. Dollar index is pretty boring, guys. It looks negative, of course, because it closed underneath some of these levels. I haven't seen my close below the very bearish level, though, yet. We could claim this is a double top into weakness. Generally speaking, if we are going to get rate cuts, that can weaken the dollar off. So we need to be aware that the dollar could be going quite weak. Now let's move over to gold. Fantastic close. Really everything you could want. I still think it's going to be buyers coming in on dips. Weekly close above the all-time high would be fantastic. And this pushes it into the 2550, 2600 narrative. It's really doing exactly as we suspected. Bull on bull on bull for the moment for gold. Really got a great trajectory on it. US oil coming down to 80. Very important level it holds here. We're watching reactions for bulls. We initially got it, then it's closed right on that low zone of the box. Oh, it needs to hold up. So oil, very important it holds up. And this led into a little bit less great trade of XLE. Now, I'm still bullish in the sector. The actual price action looks good, but I would love to see US and UK oil starting to come along with it. XLE is playing catch up, so that's how it's going. And do remember, when you're looking at your oil, you want to look actually 12 to 18 months into the future. That's the most important area to look at. Tesla overall, you can see here it's just stuck in a zone, needs to break 265. 265 plus close, things going to go ballistic, go into positive gamma, and it will look incredible. Hood, also another stock that I was talking about. We talked about this for weeks now in our Market Masters Club, but I just wanted to kind of reiterate, the last 24 hours we saw a breakout and had a good time, 2.88% on top of that, and this one has been consistent with very little left-hand side problems. So you'll notice when you go back in history, this was not exactly a period where Hood did well. It just fell and fell and fell. And this is benefiting, of course, from Bitcoin, Ethereum, etc., doing better. HSI, Chinese stocks certainly struggling here. We did see KWeb find in a big dark pool transaction. So, of course, we'll be watching that very closely, and we'll be looking at seeing some buyers recommence into this. US 2K, 2250. So we hit the first target, massive close. And then basically we are going to move towards, you would think about 2430, which is my second. That's the really peak target. Now, this is such a huge close that I wouldn't be surprised to see a little pause here. It's kind of like 250 on Tesla. I would expect a pause around this zone as the market consolidates, maybe a pullback in time. In general, it points towards new all-time highs based on the Whaley thrust and everything else we're seeing on this video. But yeah, that's, amazing run. Let's just quickly price that out. In the last 2 weeks, which is even less than 2 weeks, 12.08%. So really playing monster catch-up game. And that's what can happen. If you miss the 5 days, the best 5 trading days of a year, often it really hurts your statistics. So anyway, it's a very good run. It went exactly where we expected it to. And now, look, I still think it'll go more bullish, but I wouldn't be surprised if it has a little bit of weakness around here. KRE, overall, very, very strong. You can see here regional banks really pushing to a new high. They're pushing now for 64. So again, that should help something like the IWM, because of course it's 20% of that. RSP, very nice breakout. All of the time, equal weight, all-time high, absolutely beautiful. Looks like it's going to the moon. The thing you can do here is you can also grab a fib retracement, and you'll notice that there's, some extensions here. This is kind of pointing towards, a 176, 180 zone. So some pretty nice returns possibly from the RSP. The Qs, on the other hand, weaker. And this is exactly what we would expect. And really, it's not even the Qs that are doing it. It's semiconductors versus SPY, which is where we expect the weakness. And all we're looking for here to really see a good rotation back in, I'd like to see mean reversion. So we want a 20 weekly moving average. We know that's been consistent throughout this whole run. And it doesn't mean AI is over. It's just having a breather after a big run. This is what happens. We've seen this rotation before. Bitcoin, ballistic, bull swing zone, broken through, tried to pull back over the last 24 hours, failed to do so, and went more bullish. I still think it could do this. But I posted over on X, I kind of feel like we're getting a new high. This is very likely the low for Bitcoin. And I think there's a lot of people stuck in shorts that are getting squeezed out. We saw that in some of the stats. I'll share in the next video. In general, guys, if you're looking for news, it's not really the biggest news week. Generally speaking, this is earnings week. So Thursday is your most important earnings with TSM and Netflix. And these are the things you could be looking at, including unemployment claims. ECB press conference on Thursday may be important. And then, of course, we've got some CAD news coming out as well. If you enjoyed today's video, please remember to subscribe and smash that like button. Also, check us out over on X if you're interested. And also check out our courses, 7-Day Flash Sale, if you're interested in finding out more about how we create replicable trades. Guys, this is a very bullish market. Of course, we're seeing and witnessing history, just like we have done many times over the last 4 years. And I think it's important to always keep a cool head. You don't want to FOMO into positions. For many months, no one liked Russell. Then suddenly it came out really strong. This is what can happen. There's plenty of stocks out there. You saw it with Tesla, AMD, Intel, Hood, and so many more. Thanks, everybody. I'll see you in the next one.